This is about the bull separating line pattern, the variation of a bull separating line pattern. It's a daily time frame chart of CAC index. So as you can see, these two candles, they almost have the same opening price. That's very important. When two consecutive candles are having the same opening price, okay, that's a separating line pattern. In this case, it's a bull separating line pattern. It's a continuation pattern. The reason why I call it a variation is because the two opening prices are not exactly the same. If they are exactly the same, then we are looking at a bull separating line pattern. It's a continuation pattern, very strong pattern. As you can see, the market is going up. You have these two candles completing the bull separating line pattern, the variation. So that becomes your entry point, that would become your stop loss, and that would become your target. So not a great reward to risk ratio. However, we know that for a continuation trade, you cannot expect a very high reward to risk ratio because the probability that the trade will go in your favor is very high because you are getting into a continuation trade. The only problem with this trade is this falling window, which will act as a resistance. So if this falling window were not there, then that was your target. So you are getting a good 1.5 to 1 reward to risk ratio with very low risk, since this is a continuation pattern. And look what happens next. Definitely that target is achieved, and just within a few days, within a week, your target was achieved. So it's a very powerful pattern. It's called as the bull separating line. That becomes your entry, that becomes your stop loss. I have explained this pattern in detail in level 16 of my candlesticks trading mastery program. Go to this link, you will find that program there. It's a pattern that comes after a uptrend. It has the two candles have the same opening price. Both the candles should preferably be long real bodies. That's your entry, that's your stop loss. It's a continuation pattern. If you look at the psychology behind this pattern, the market is going up, there is a bearish candle, the bears are very happy, but suddenly on the next day, the opening price is so strong that the bears have become nervous, and by the time the day closes, the bears have completely given up. And when the bears give up, what happens to the price? The price goes up. And look what happens here.